Hi, everyone. Thank you for joining us today for our webinar on LID, specifically talking about how to maximize your credit union's potential when it comes to attaining and retaining a low-income designation. We are CU Collaborate. For those of you who are new to us, we are a data and analytics QSO, have been around for about 10 years now, and we really empower credit unions to adapt and thrive, leveraging proprietary data and technology alongside deep subject matter expertise. You'll hear us reference this a few times in our presentation. In terms of our areas of expertise, just taking a step back for a quick moment before we dive into LID, our capabilities and where we really help credit unions are focused in three areas. Number one being growth. So everything from like field of membership and charter expansion, to growth through our merger network. We're also providing SEG and B2B growth strategy, and then consumer marketing and branding as well. In the area of performance, we've got performance analytics and benchmarking, branching strategy, product development, and then we also help credit unions maximize and analyze their impact through CDFI solutions, LID solutions, and then impact analytics as well. My name is Phyllis Lee. I'm the CMO here at CU Collaborate, and I am happy to introduce a few of our speakers today who will be sharing their expertise related to LID in particular. Jason Rustin's our advisory director. He's key leadership when it comes to our advisory services. So you will see him across a range of services, but LID in particular is an area that he has deep expertise in. Laura Gooding is our senior advisory consultant, and she is here at CU Collaborate working on a couple of things, but again, deep expertise in LID. Marco Rasic is the president and CEO of one of our key partners, the National Auto Loan Network. And as we are discussing LID and all of the ways that we are helping credit unions, you'll see, of course, the National Auto Loan Network come to play as well as a partner who is bringing a lot of value. Jason, I'll go ahead and hand it over to you. And before we get into it, just a couple of housekeeping things. If you have any questions, please feel free to post those in the chat. And we will be addressing those at key points when we walk along, as we go along. And then we also have a Q&A section in the back. In the back section. We also will be sending out this presentation. So, feel free to kind of focus and not have to take notes. And we will also be sharing a recording as well of our webinar.
Okay, I guess we can go to the next slide. So thank you, Phyllis. Good afternoon, everyone, and thank you for joining us today. So we're here to talk about the NCUA's Low-Income Designation, what it is, why it matters, and how your credit union can benefit for it. But before we dive into the details, I wanted to take a few moments to zoom out and look at the bigger picture, what's happening across the credit union landscape and what it means for institutions of all sizes. This first chart presents a pretty stark picture. So in 1970, we had nearly 24,000 credit unions in the United States, and today that number has dropped to just under 4,800, which is a decline of more than 80%. So clearly, while the pace of consolidation has slowed a bit in recent years, the trend is still downward. So the industry is shrinking, and with that shrinkage comes increased pressure on those that remain. Simply put, running a credit union has never been more challenging. So next slide. So let's dig into what's driving that pressure. Today's credit unions are navigating a complex set of operational and strategic challenges, from legacy technology systems that are expensive and difficult to modernize, to rising labor and technology costs, to a regulatory environment that continues to increase in both scope and complexity. You're also contending with economic headwinds like inflation and interest rate volatility, while also trying to address strategic issues like how to attract younger members, managing SEG relationships, and keeping up with a rapidly changing marketplace. Put simply, credit unions are being asked to do more with fewer resources and to compete in an environment where the rules and expectations keep shifting. Next slide. So when we dig deeper into the data, we see that some credit unions are faring better than others, and the common denominator is scale. This chart shows 10-year averages for asset growth and return on assets by asset size tiers. And what you'll notice is that performance steadily improves as asset size increases. Credit unions with over 10 billion in assets saw 10% annual asset growth and return on assets over 1%. Compare that to institutions with under 10 million in assets who saw just 0.4% growth and an ROA of just 0.11%. So the gap is significant, and it highlights a real structural advantage for large institutions: more resources, more pricing power, and more capacity to innovate. For smaller and mid-sized credit unions, that raises a key question: how can we access tools and strategies that help us compete and grow sustainably? One of those tools is the low-income designation. Size is not the only driver of performance. So when we looked at the data comparing LID-designated, low-income designated credit unions with their non-LID peers, we see a clear advantage with those that have the designation. In terms of asset growth, LID credit unions had 9.4% annual asset growth over that same 10-year period compared to just 7% for their non-LID peers. And then looking at return on assets, we see LID credit unions outperforming their peers with an ROA of 0.91% versus 0.79% for non-LID. We do not think these benefits are coincident. Indeed, the low-income designation opens the door to important advantages such as access to secondary capital, grant funding and exemptions from the member business lending cap, and more. So at a time when growth and sustainability are increasingly tied to scale, the LID can act as a strategic equalizer, helping credit unions of all sizes pursue their mission and remain competitive. So with that, I'll hand it over to my colleague Lara, who will take us through what the designation entails and how CU Collaborate can help your credit union obtain and retain it.
Thanks, Jason. I'm glad to be here. So some of the regulatory benefits of a low-income designation. The first is the ability to accept non-member deposits from any source up to the greater of $3 million or 50% of total shares. This, some of our clients have used this for strategic advantage when they are looking at mergers and acquisitions, for example. This can help with those efforts. Exemption from compliance with the member business loan cap. If business lending is a key part of your credit union strategy, this could be an important benefit to take advantage of. As Jason mentioned, there's the ability to apply for technical assistance grants and low-cost loans from the Community Development Revolving Loan Fund, the CDRLF. This is something that can really help credit unions with smaller asset sizes. Then there's the ability to include subordinated debt in the net worth ratio calculation. And finally, expanding membership to others affiliated with the community, such as people who perform volunteer services or participate in community associations. This last bullet is limited to federal community credit unions, so there is that caveat there. But what that benefit does is functionally expand your field of membership by allowing people who participate in associations to join the credit union. Next slide. So as Jason covered, there's a clear advantage to LID, and there's all of those regulatory benefits to go with it, but it can be challenging to attain LID and also challenging to retain LID. At CU Collaborate, we've had two proven paths to attainment. The first is looking at actual membership and the data that can be derived from your ARIES files, and then looking at a low-income community credit union and looking at the potential membership. Next slide. So first of all, looking at actual members, this is looking at the data from your ARIES file and better understanding your membership. To achieve LID, a majority of your actual members have to qualify as low income. So at a high level, the members that are going to qualify are residents of low income areas. So one of the first steps of this analysis is geocoding your ARIES file, taking the addresses of all of the members and determining what census tracts those members are in. This information is then compared against a workbook by the NCUA that tells us what geographies are LID qualifying. And I'll come back to that in just a couple slides here. But if your member lives in those low income areas, then they help contribute towards your LID percentage. High school aged members, ages 14 to 19, also count. But it's important to note that this information is prorated based on the census attendance rates in which in the state in which those members live. College, university, vocational students also count towards LID. These numbers are not prorated, but we do have to provide documentation to the NCUA on how these members were identified, and there are some specific restrictions that the NCUA has placed on that as well. And then there's the active duty military members. If your credit union has a significant military population, this can be another route to pursue to help move that needle. Like high school students, the military members are prorated. It's at about 53%, which is set by the NCUA. But again, if you have a significant military population, this could be another way to move that needle. For residents who do not qualify, or members who do not qualify, conversely to the first bullet, it's residents of non-low income areas. So if you don't live in one of those LID qualifying geographies, you do not count towards the low income designation count overall. Members with PO box addresses also do not qualify, and this is because PO boxes cannot be geocoded. So some of you have heard me give this explanation before, but the example I always give, I live in Denver, which is mostly LID qualifying census tracts, but I could have a PO box in Breckenridge, which is not LID qualifying. And if my member data said that my mailing address was that PO box in Breckenridge, there's no way for you to tell if I actually live in Breckenridge, which is not LID qualifying, or live in Denver, which is. As a result, PO boxes are immediately counted as non-LID qualifying. Then there's members with business addresses. This one can be a little bit confusing because it's focused on the addresses itself, not the account type. We know that credit unions, you're tracking if it's a business or if it's a family, an individual, but this is actually based on the location of those accounts. So there is a data set from the United States Postal Service, we call it Melissa data, that your data is run against to identify which ones are businesses. And if it matches with the Melissa data and it's identified as a business address in that data set, then it's counted as a business, regardless of the actual account type at the credit union. Next slide. Thanks. Okay, so the other one that I mentioned, the other route to LID attainment is looking at your potential membership. And again, this is limited to federal community credit unions, but in certain circumstances, potential membership can be a strategy to efficiently obtain that LID designation. The way it works is if the majority of the total potential membership meets that low income definition. The map here is an example of a project that CU Collaborate did with this. But the reason this qualified for LID is because the population of this area, the majority of that population resided in low income qualifying tracts. So that brings me to a potential strategy to approach for this, which is applying for an FOM expansion into a LID qualifying community. That can be another route to help your credit union attain that designation. All right, so I mentioned the NCUA's LID workbook, wanted to come back to that here. What we're seeing is a visualization from our Expand CU software, and it's showing us all of the LID geographies across the United States. The green shaded areas are all the qualifying tracks. Now, this workbook shifts from year to year because it's built on census income data, and we update our software regularly to make sure that we can stay apprised of those changes. And this often accounts for shifts that you see in your LID percentage, which is another one of those factors that can make it a little tricky to attain LID, to retain LID, but it's also something that CU Collaborate is well equipped to support. So key steps in LID attainment. There's 5 stages, but as with anything, there's some circular movement between several of these stages. The first is determining the baseline. We take your ARIES file, we geocode it, which is matching the different addresses to the geographic or to the census tracts in which those members are located. And that gives us a baseline of where everything is at. How many members are LID qualifying based on area and how many are not. Then we start looking at the data cleanup and data enrichment stages. We look at things like, are there a lot of members with PO boxes? Are there incorrect addresses that can't be geocoded? And then also data enrichment. What information can we add to this file to optimize your LID percentage? So can we add members' dates of birth to model high school students? Can we complete enrichment to determine college students? Can we make your baseline more accurate by running it against that Melissa data set which identifies businesses. All of these strategies help get us a more and more accurate baseline and help move that needle towards that 50% plus one member threshold required to qualify for LID. Once steps 1 through 3 are done, then we're looking at longer term strategies, strategic member growth. We're trying to attain new members that are LID qualifying, ultimately increasing our LID percentage overall. Steps 2 through 4 can be pretty cyclical if we're farther away from that 50% mark, but ultimately all of this accumulates towards the NCUA review process, which we help with that process, but you submit your data to the NCUA requesting that they analyze it to determine if you qualify for that low income designation. Next slide. Okay. CU Collaborate has some software options that help these efforts. At a high level, there's the Analyze CU LID report. What this does is it allows you to upload your ARIES file and look at a dashboard to see where things stand and where opportunities for enrichment are. And it also allows you to export a file that identifies which members were or were not LID qualifying and why. It can help make strategic decisions when you're looking at next steps to take to attain LID. There's also Expand CU, which is our mapping software that can show you lots of data overlaid in an easy to digest way. The Expand CU, that was where that picture came from with all of the shaded green geographies, but you can use this tool to also look at where your current members are in relation to LID geographies, if your field of membership covers enough LID qualifying geographies, and also compare things like income data or population density. Then there's our LID API. I will fully confess that I'm not a programmer, but the very simple explanation of how this works is on the spot, you can determine if an address or a batch of addresses are LID qualifying or not, and you can build that into your credit union's decision-making software when looking at things like loan applicants. Next slide. So I mentioned the software bits, but wanted to talk a little bit more about ways you can use the software. So our Analyze CU LID dashboard, those are the screenshots that we're looking at here. In a nutshell, you can identify data enrichment opportunities that will maximize your LID percentage. We have the ability to model high school students, so applying the dates of birth of those students, making sure that you get the maximum chance that they are counted towards LID. You can also complete college student enrichment. Through our software, you can run your data against the National Student Clearinghouse's data set, which the NCUA is recognized as an authoritative source on determining who is currently enrolled in an institution of higher education. What's convenient about that in our software is that it builds in that enrichment and the results. So if you run the enrichment going forward, you'll continue to have that data available. It also helps narrow the scope of the enrichment, ensuring that you're only conducting this data or applying this data towards records that have not already qualified for LID through some other route. Finally, you can identify those opportunities for data cleaning and enrichment. It can tell you which records are PO boxes and how that's impacting your results. Similarly, which records have invalid addresses and which ones you would need to correct and help shift those results. And also, if you have a significant military member population and you have a way to identify those members, we can add that to the software to ingest as well. And it can factor in the military members as one more trait that can shift your LID designation. Next slide. Another way to use the software is with targeted marketing efforts. So I mentioned visualizing LID areas in the CU service area. Like I mentioned, I live in Denver, so any example I give is always based in Denver. Here we are. This location is the Denver Capitol building, but you can see we were able to type in the address, zoom into it on a map, and you can see that it's located in one of those green LID qualifying areas. This is helpful for determining if an address is LID qualifying. It can also help with community outreach efforts, or if you wanted to know which geographies to focus your marketing on, it is also useful for that aspect. Then we also offer a service of LID marketing lists. You request a specific geography, And then we can provide you with a list of potential members within that geography who are not already members and who are LID qualifying, thus maximizing your ability to conduct outreach to LID qualifying individuals. Next slide. So finally, one of the things we can do is identify partners in LID areas. So this is, sorry, frog in my throat. This leverages our API to confirm LID qualification for applicants. We have lending and member acquisition partners with a wide variety of asset classes and loan types. Partners can deliver applicants to the credit union through forward flow lending arrangements, embedded financing and merchant lending, and also targeted marketing software. And we also vet our partners to ensure that we can support credit unions of all types.
Thank you, Laura. On the note of partners, we wanted to bring the National Auto Loans Network today to have some discussion with you about the specific forward flow lending benefits that they can provide, and also to answer any questions that you might have around using that as a strategy for marketing and outreach. I'll go ahead and pass it over to Marco Rasek, who will be walking us through this.
Hi everyone. Thank you, Phyllis. So, I founded the business back in 2010 with the simple idea of helping consumers obtain financing when they purchase a vehicle after the fact. So essentially serving the underserved, where, a good number of consumers, when they purchase a vehicle, don't necessarily know that they can obtain financing, get pre-approved, even if they're a member of a credit union ahead of time, and then walk in to purchase a vehicle with the money in hand. So we've created a way that, through the years, we approach the credit bureaus and build files, and we identify consumers that, we believe are mispriced. They have great payment history on that auto loan and their other trade lines, their other loans that are on the credit bureau, but for some reason they have an interest rate or loan terms that do not necessarily match their credit profile. All right. So typically what we've done through the years is in serving the underserved, we worked with credit unions. So very basic for us is, our motto has always been loans made easy, right? So in working with credit unions, what we do is, we'll approach a consumer directly using our outreach through direct mail and give them a very simple call to action. When we looked at our loans that we originated since 2018, which were, over $2 billion, we found that over 72% of those consumers were low income qualifying. And over 57% were from CDFI areas. So we really, without even, I don't say even trying, but essentially we're always in the marketplace across the United States. We currently work in all 50 states. And, we create specific marketing campaigns that uses our brand, National Auto Loan Network, where we'll go directly to the consumer with a very simple call to action, like I said. So, all right. Next slide, please. Thank you. I think we might have skipped one. Is that right?
I think you've got one more afterwards.
One more after? Okay, good. All right. Yeah, perfect. Okay, so we'll go back. Thank you. Thank you, Phyllis. All right. Yeah. So we recently partnered with a credit union in Utah, and midsummer of last year, and so far we've had great results. So, we looked at low-income qualifying consumers across the United States, and to date, we funded over 1,300 auto loans with a little bit over $30 million. More than 80% of the borrowers have been LID qualifying. Part of our process, it's very important to us to, if you can imagine, take a consumer who's currently paying on time, has great performance history on the auto loan, save them money, but also make it really simple for them to continue to pay, right? And one of those things, when we all get our an auto loan. It's, how do I connect the automatic payments? So we make that a part of our process. So what we would do, not only using your loan documents, your membership application, your credit application, your loan and security agreement, we'd also ask you for your ACH, your automatic payment form, because we'd like to get that signed up immediately. We handle all the lien perfections. So there are 27 states that are ELT states, defined electronic lien transfers, and the other states we would handle paper. But we do that across the United States today. Typical timing to, from an engagement, once we have everything agreed to on how we would market and who we would market to, it's about 3 to 4 weeks to kind of get everything connected. So pretty straightforward. We're on, I'll say this, we're on all of the platforms. So we're on, Meridian Link, we're on Route One, we're on Cuddle, Origins, to name a few. So we have capability as well. All right. So as far as the process, pretty straightforward. Again, we're going to advertise directly to consumers using our brand. Very simple call to action. It'll either be to go online to NALN or to call us. If they were to call us, we're a Tustin-based, so Tustin, California, Central Orange County-based company that we have about 150 people, of which we have 85 loan officers that would work with each individual. One of these loan officers, he or she would work with an individual consumer. Part of our process, we have an API directly with CU Collaborate that we leverage on an application by application basis that will verify that a consumer would be LID qualified or not. We have kind of 2 paths to go. So our credit team, as a part of the process, can review and price within our system, or we can pass the application over to be reviewed by your individual credit team. All right. If approved, we would have, we'd let the consumer know the approval terms. We'll go ahead and prepare a DocuSign. We'll get a copy of their driver's license, insurance, registration, verify everything, and then we'll go ahead and send a DocuSign. Including the DocuSign will be a title application and a power of attorney, because once the loan is funded, the consumer's memberized, we're going to go ahead and perfect the lien. So we'll have all the paperwork completed up front. And then we would send the package over for funding and membership. And from there, we'll provide reporting and communication on lien perfection. So very straightforward. We've done that A to Z. We've done the lien perfection side since 2016 with great results. So we do not outsource any of that to another business. All right. Thank you.
Thank you so much, Marco. We've thrown kind of a lot of information out there. Obviously, started off with talking a lot about how we approach helping credit unions attain and retain LID, and of course, kind of segueing to Marco and what the NALN can do, specifically with this forward flow lending partnership that we have with them. Are there any questions that the group has related to LID? And it could be anything. You feel free to put anything that you've been thinking or mulling over in the chat. There are a couple of links too that we've included in the chat. Number one is a meeting link to discuss LID. If you have any sort of questions, a lot of times in settings like these, people don't feel comfortable asking more specific questions about their credit union, but you might have a lot of considerations that you're really probing into. So, feel free to use that link. And I saw a question came through. The second meeting link is to book a meeting to learn more about NALN as well. So you heard a high level from Marco as far as what NALN does, how it can really benefit you in this process. And if you want to talk more specifically about anything related to your credit union, please feel free to use that link. We do have a question in the chat, and the question is approximately how long does the process take to get approved?
Yeah, I can take this one, but Jason, jump in if you have additional input. It really depends on the baseline. If your numbers are pretty far away from that 50%, it's probably we can't put an exact timeline on it because so much of this is about like member acquisition and outreach to low-income qualifying communities. It could take anywhere from like if your numbers are lower, it could take a few years. If it turns out you're actually very close to that 50%, we could make it happen in like 6 months to, or help you make it happen in 6 months to a year. But it's really dependent on where that baseline is. The other thing is it's dependent on your field of membership. If you have a field of membership with very few LID qualifying geographies in it, that can also take longer to overcome because you're working against what the probability of hitting more low-income qualifying individuals in that geography. So that can be a factor as well.
I'll also add, some of the tools that we're offering can really accelerate the process, especially in the acquisition front. The example that Marco shared earlier, that was for a credit union who, they were in striking distance, but with organic growth, it would have taken at least double the time to get where they were able to get by leveraging the partnership. In terms of the actual NCUA approval process, when you submit your data to the NCUA, that process can take anywhere from 2 to 4 weeks, typically.
Jason and Laura, let me follow up on that. We've actually had conversations in the last couple of years where credit unions are involved in the process of becoming LID approved, right? And they've said, how do we get a really high percentage of LID qualifying consumers? And we've gone to the idea that we can do 100%. So like we could send every consumer that we find as a part of the campaign, the advertising campaign. We could bat 1,000 essentially when a consumer comes in. We check them, and we make sure that they are LID qualifying immediately. So, we have a way to do that at we could be 50% LID qualifying or 100%. So we really have the capability to do that. So whether you're in the process starting now to get approved or you're already approved and staying at a certain level is important. So.
Thank you. Just going to the next question. How to split loans between qualifying LID CUs that could serve the same borrower?
Yeah, pretty straightforward. We actually, yeah, no problem. We actually run individual campaigns. So think of it this way. We identify your field of membership through an association foundation based on geography. And then we do run individual campaigns based on a relationship. So we understand your credit guidelines. We understand the consumer loans you're trying to bring on board. And then from there, when the letter's sent out, it has a personal ID code. So when a consumer receives a letter, it's gonna be branded National Auto Loan Network, but each letter will have an individual consumer code. When they go online or call us, at that point, we're gonna complete the application, underwrite the application with your credit guidelines in mind. So there's not a chance where you can imagine where we would send it to more than one partner. The application would only go to you, and only if you pass would we waterfall to another partner of ours. So it's really straightforward on our side. So the goal is, let's say that you wanted, 50 new members a month for, let's say, $1 million, 250 in loans. We're able to do that. Or if you wanted, 500 loans, new members a month, we could do that as well. So we have capability to, really dial up and dial down opportunity in the marketplace on a quarterly basis. So, all right.
Thank you. And then we have another question here. Is there a minimum number of members?
I think, do you mean a minimum number of members to qualify for a LID or a minimum number of members to submit at all for analysis? I mean, I can just go ahead and answer both of those questions, but I just want to make sure. Okay, to qualify for a LID. There is. So there's two numbers that you have to keep in mind. It's the file size that you submit to the NCUA. That unique member count has to be within 10% of your latest call report member count. So if you had 100 members reported on your call report, between 90 and 110 unique member IDs would need to be in that file. As far as qualifying for a LID, it's 50% of your membership plus one, just a simple majority. So if in that example where you have 100 members, 51 of them have to be lead qualifying, and that's what will get you across that finish line. It's not dependent on the size of your credit union, because we've helped really big credit unions attain lead, and we've helped very small credit unions attain lead, and that's not the restrictive factor.
Great, thank you. Just pausing a quick second to see if any other questions come through. All right. Well, again, there are 2 meeting links in the chat that you can use. We'll be sending out the recording as well as a copy of the slides that we're sharing today. And we also wanted to let you know that we have another webinar coming up on Thursday, April 17th. We'll be sending out a registration link for that as well. But we're really looking at data-driven impact reporting and advocacy within credit unions, of course, more critical than ever, given the landscape. So we're looking at credit unions and leagues nationwide, how we're leveraging software to really amplify these efforts. And we will have 3 speakers for that webinar. Adeliana Gomez, who leads our SAG and Business Development Growth Strategy, will be on that, as well as Ben Herring, who leads partnerships for CU Collaborate. And we'll have a representative from the Nebraska League as well joining us. So it promises to be a very interesting discussion. Looks like that's it for questions. So please feel free to use the meeting links as needed if you would like to have some follow-up discussion. Thank you again for joining us today, and appreciate your interest in really figuring out how your credit union can benefit from low-income designation. Thank you again to Jason, Laura, and Marco as well.